plug it up on the,
All right, welcome to a new section of our course. We're going to be talking about this next 3 weeks. We're going to be talking about financial transactions and fraud schemes. To be honest, this is probably where we should have started, but I felt it was important to start with kind of the investigation concepts. It's a pretty basic investigation to start with. I know everybody's looking at thalassemia counters. There's so much detail, Dr. Barnes. How can you say it's basic? I said, trust me when I say it ramps up from here. It ramps up. I did want to talk a little bit about some things that some kind of housekeeping things before we get started. So the next case has been posted. I've posted some responsibilities for this first week. The question was asked, can you reach out to your contacts? The answer is yes, but they should be limited to clarifying questions and lack of detail, because your first response, your first detailed series of requests is going to be delivered next Tuesday. So if you need clarification on certain points, you don't understand something, that's fine. Detailed requests should wait until next week. This is just to get everybody organized and get prepared so that we're kind of all ready to go. I feel like we rushed into it for the first case, and that was just me not having the experience of trying to do things in the time frame. I really wish we'd done it over a 4-week period than the 3-week period, but won't make that mistake this time, so we'll get that organized. I mentioned this to all the groups, but I want to remind you that at the end of week 7, which is basically two weeks and 2 days away, your fraud scheme project deliverable 1 is going to be due. This is just the brainstorming part where you tell me a little bit about it. So you're going to tell me a little bit about the nature of the fraud, who committed, how it was committed, the economic impact, and the financial benefit. It's going to loosely follow the same outline that we'd be doing for our investigation projects in class. I do not expect you to have the same level of detail as one of these cases. Again, like I said, this is probably something that took them several years. We've got a few months, so it's going to be limited in scope. That being said, I'd like you to kind of expand your horizons and think about some ways to approach this. Think about how it is that you would commit the fraud if you were the fraudster. I know that that's basically saying, okay, I'm teaching you all how to commit fraud, but I admitted that I was going to be doing that at the beginning, that you're all going to have to learn how to commit fraud. It's only your stern sense of ethics that's going to keep you from all becoming white-collar criminals. All right. But that's how we actually detect and we prevent fraud, is that we understand how it gets created, and that's going to be critical for these fraud scheme projects. So the question last year came up, if we're not happy with what we did at the beginning, can we make a revisions? The answer is yes. That you're not locked into anything with this one, but I would like you to put some serious thought into it between now and 2 weeks from now. The last thing I want to talk about, this is something that I mentioned already. I did put instructions for the healthcare compliance and investigation presentations. I have not assigned groups yet, mostly because I don't know yet who is actually participating in the 3MT competition in a few weeks. Again, they're exempt from participation in this. They get the full 30 out of 30. For those of you who are not participating, that's fine, but you will have to do this presentation as your assignment. I recommend that you start thinking about this right now, about companies or topics that you want to talk about. It's not restricted specifically to fraud. It can be on compliance, or it can be with security, but you want to look into a healthcare company, and the presentations will be on the 21st, like I mentioned. I have updated the syllabus online to actually reflect this. That will be the online presentation, and all the groups will present. It will be a random assignment of groups. You will not know who you're going to be working with, and I won't have that probably until around spring break, but it's still a good time to start looking at the instructions. Also, I've mentioned this in other courses before, but I do want to reiterate this. Please make sure you take a look at the oral presentation rubric and the oral presentation guidelines. For context, the oral presentation rubric is the School of Business and Professional Studies rubric that was developed for these presentations. That is kind of the standard that we use for all presentations and all courses. The guidelines are my personal interpretations of that rubric. Then the reason why is because my interpretations are going to differ from other presentations. I'm not going to mention any names, but there are certain instructors who are very, very anchored on vocalized pauses. All right. I don't particularly care if you use vocalized pauses, at least not always. I do them all the time, so I certainly can understand that. But I do have some very explicit expectations of my own, and you do need to be familiar with those. If you violate my expectations, if I say don't do this and you do it, your entire group is going to suffer as a result of it. So you want to make sure that you spend some time focused on that and make sure that everything is up to par. I will be grading these critically. There will be critically questions asked. If you want to get a good grade on this, you will want to spend sufficient time on it. So start thinking about it now rather than later. All right. With that, we're moving into financial transactions and fraud schemes. Some of these are going to be very, very familiar. Some of these are going to be somewhat new. So I had you look at a occupational fraud report. The ACFE does this every 2 years. The reason why we don't have 2026 is I don't think it's been published yet. I'm not 100% certain of that statement, but I believe that when I started developing this, it had not been prepared. I think they're still working on it. So 2024 is kind of the new one. The good news is that the details from this are fairly static. This doesn't change a lot. I say that I do think that there's going to be a lot more presence with technology frauds or technology-based frauds in the future, especially with the advent of cybersecurity concerns and AI tools being utilized in the capacity of fraud. However, this is pretty basic knowledge and some things that I want to make sure that everybody is clear on and has a good detailed understanding of. So we're just going to start out with a few basic questions. I'm going to refer to this document, which I've got up in the PDF, and we're going to refer back to that for certain items. I did kind of mix things up a little bit because, why keep things normal? So I alphabetized according to last name, and that's the order I'm going to go with this time. So if you thought that you were only going to be answering a certain question, surprise. So yeah, that's going to be what I throw at you. So 3 categories of occupational fraud. There are 3 of them, so I'm going to ask 3 group leaders about each of these. I want you to provide a brief definition of each. So Jack, you are the first in alphabetical order of the group leaders. What does your group say?
Corruption involves engaging in illicit or illegal activities and gain personally, sometimes at the expense of someone.
Very good. Very good. Okay. And so basically a very general term that we can use to describe corruption is a wrongful act designed to cause an unfair advantage. We tend to categorize bribery and corruption as the same thing. They are not. Bribery is a form of corruption, as we're going to get into. But if you think about the nature of bribery, what is the purpose of a bribe? The purpose of a bribe is basically to get some sort of unfair advantage in a certain area. We could talk about it in a business context if we provide somebody who's a governmental or worker in a certain area a bribe to actually have them overlook or to have them oversee or bypass a particular problem. We can think about it as bid rigging. That would be a form of bribery. That's something where we try to actually incentivize being selected for a bid by providing additional funds to somebody else who's responsible for the choice. One thing that we're already familiar with, we talked about it last week with FIFA. We're going to talk about it with the NCAA betting scandal. There are briberies for performance, okay, and all of these are kind of within the general scope of corruption. So we're going to get to a little bit more detail on that, but good definition. What's another definition, Isaac?
Asset misappropriation that involves an employee stealing or misleading employing organizations' resources.
Okay, so yeah, it's theft of a usually tangible asset. Is it possible that theft of a non-tangible asset could be considered misappropriation of assets? I think it's a bit dicey because I know the majority of the people in this room are accountants, and we say, well, theft of information, but Dr. Barnes, you already told us data is not an asset. And I say, yeah, okay, good point. Okay. But if we're talking about things that have value, as Isaac's definition said, we're talking about resources. We can actually have theft of non-tangible resources that still generate value. But usually with respect to misappropriation of assets, we're talking about tangible assets. What is the most common tangible asset that's stolen? Cash. Okay, we're going to get into that a little bit because there are 30 different schemes in the ACFE fraud or the Occupational Fraud and Abuse Manual the ACFE identifies related to cash. And so that's kind of tells you what's the most common one there. All right, what is the last one, Hannah?
Statement fraud is the intentional manipulation or misrepresentation of financial data.
Right. So basically, the way that we kind of think about this is that organizations prepare financial information, and these are usually done by the management team of the organizations. The management team may be incentivized to misrepresent that information. All right. Now, when I talk to my accountants, I say Enron, and everybody's like, "Oh yeah, Dr. Martin's Enron." Okay, but there are a lot more common examples of this that we can get into detail about, and so we're going to go to a little bit more detail. By the way, for those of you who are not accountants and never heard of Enron, check out Enron. It's a sordid affair. Okay, we're not going to talk about it in this course, but it's something it's thoroughly engaging and entertaining to hear about. All right, now moving on. According to the report, which category of fraud had the highest representation and percentage of cases? All right, so I'm going to do this one because it's pretty easy to interpret. So pretty easily, when we talk about percentage of cases, I'm going to say 89% is greater than 48% and 5%. So asset misappropriation is going to be the most common concurrence. Now, speaking just from an intuitive perspective, just us sitting here as lay people, I know that everybody's got some knowledge of this already, but imagine that you're talking to somebody who has no knowledge of these fraud schemes, and you tell them, Well, theft occurs more frequently than misrepresentation of financial information. Would you in that position say, oh yeah, that makes sense? Yeah, theft is a lot more easy and a lot less detailed in scope. And so when we talk about theft, we're talking about any type of theft. Now you'll notice the median reporting is very, very high. I would suspect that this number is far, far greater. This is only amongst items that are reported to the ACFE. So I imagine that the occurrence of asset misappropriation is far, far greater, but the amounts that are being reported are the ones that are significant amounts. So if somebody steals like a hubcap off an assembly line, that's not going to be something, well, we got to report this to the ACFE. All right. So I don't know why I thought of a hubcap right now. I was looking for a tangible asset and it's the first thing that came to mind. Okay. So yeah, I don't know where my mind is. So yeah, the most frequent, but what about the ones that we're talking about highest meaning losses? We're talking about over here, that's financial statement fraud. Financial statement fraud is, what is the rough estimate? About six times larger than asset misappropriation and about 4 times larger than corruption. So again, these are just reported cases. I would assume that on average, these numbers, it's very unlikely that these numbers for financial statement fraud are going to be reported if it doesn't take place. And what I mean by that is we could have any asset stolen and it's unlikely that most theft cases are not going to be reported to the ACFE. But if a financial statement of fraud occurs, that probably will be reported to the ACFE because nobody's just going to say, I'm misrepresenting the financial statements by 10 cents. All right. That's not something that frequently occurs. There's actually, has anybody heard of the comedy troupe Monty Python? So a piece of knowledge about that, the term spam, email spam, actually comes from a skit from Monty Python, all right? Because they have a skit where they're ordering in a diner and they sing a song about spam, all right? And it's not really a song, it's just them singing spam, spam, spam over and over again. But that's not what I was getting into. There's a skit from Monty Python, a different skit, where they're doing a breakdown of the budgets for the one of the British ministries, and they were talking about an additional tax upon a tax. And it said, that doesn't make any sense. You don't tax additional tax. And it says, what happened to that additional penny? And the guy's like, I embezzled it. And so they fired him for a 1 cent embezzlement. And so, yeah, that's always where my mind goes when I think about immaterial fraud taking place. Anyway, material frauds generally are going to be really, really significant with respect to financial statement fraud. So the percentage of cases much lower, but when it does occur, going to be frequently significant. All right. So yeah, are these results related? Why or why not? Just simply because it's much harder for this to take place. When it does take place, you want to make it impact. Okay. If you're going to put all that work into committing a fraud, you want to make sure it's a big fraud. All right. The easy frauds, okay, those can happen all the time. You know, that's just, you're not really trying hard if you're doing a theft. All right. By the way, thefts are completely fine if you want to do that for your fraud case. Okay. I'm just saying, okay. But put in the effort, you want to do that financial statement fraud. All right, going back to our questions. So according to the report, past frauds have frequently involved more than one category of fraud. In fact, most reported financial statement frauds have involved asset misappropriation or corruption. Now, this is very interesting because we actually knew this before we read the question because they actually did. So look at the percentages here, 89%, 48%, and 5%. If you add those together, that's 143%. So how does that happen? Well, there are certain asset misappropriation cases that are going to also count as financial statement fraud cases and maybe even as corruption cases. So it's not necessarily aligned to one category. They can cross multiple categories. Now, the interesting question about this is that what do you think contributes more to the mingling of fraud schemes, the nature of fraud or the behavior of fraudsters? All right. So this is kind of the first difficult question. And McKenna, I think I ask you difficult questions in all the classes. Okay. It's nothing intentional. It just happens to happenstance. So what's your group say on this one?
The great thing is that the longer the fraud takes place, when two things may happen, either the fraudster gains more confidence, the ability to commit fraud in further areas, or the fraudster must commit increasingly more fraud in order to go undetected. Okay, that's an excellent point, that last point, especially. When we talk about the nature of the behavior of fraudsters, we already know that fraudsters are generally not going to be satisfied with one and done. All right. By the way, if you become a white collar criminal, be a one and done white collar criminal, because that means that you're less likely to get caught. I don't want to hear about, well, Dr. Barnes taught me to commit fraud so well, and so I committed fraud 37,000 times, and I didn't get caught until the last one. I said, if you'd done it one time, you would have gotten away with it, guys. Did it one time.
Yeah, I'm really teaching you how to do bad things. I'm sorry. Okay, I shouldn't do that. But yeah, that's the escalation and perpetuation. That's one of the problems with fraud is that it just very rarely is going to be one of those things at a time. So yeah. And then what about the nature of fraud? So does that contribute at all? Could we make an argument the nature of fraud also contributes? What has to be present according to our fraud risk factors, which you've already talked about? What has to be present in order for fraud to occur? Obviously, pressure and rationalization, but what's that other one? Opportunity, okay? So if the opportunity is present, that means that there's probably some sort of weakness within the infrastructure of an organization. If there's opportunity to commit fraud, say a financial statement fraud, does that mean there's probably opportunity to commit fraud with respect to misappropriation of assets or bribery? Yeah. If there's a weak fraud infrastructure, it's probably weak in multiple places. So that opportunity is probably there. So it's kind of a no-win situation because I was going to say you probably could argue for both of these. And I guess maybe that's a win-win situation because you could argue for either one and been correct. I think both of those have very, very sound foundational arguments with association with them. By the way, I think that's a big issue that we're going to see with our next case that we're going to talk about on Thursday. For those of you who've not looked at the case Crazy Eddies, they actually had multiple fraud schemes going on, and some of those are misappropriation assets, some of those are financial statement fraud. And I think it was just because the control environment was non-existent there. And yeah, so we'll get to that more on Thursday. All right, moving on to question 4. The report identifies 2 general areas of financial statement fraud. The first of these, overstatement of net worth and net income, is fairly well understood. What is a recent example of this type of fraud? So there's got some fun ones here. Let's actually talk to a couple of groups on this. Cole, what'd your group identify on this one?
We talked about the 2020 Wirecard issue.
I knew that one of the groups was going to talk about that because auditing. Yes, for those of you who don't know, we're talking about Wirecard and auditing tomorrow. So yeah, yeah, but yeah, good. So what happened in the Wirecard fraud?
They lied about amounts in their accounts and reported big transactions to overstate their income.
Very good, very good. Yeah, so Wirecard's a good example. Kate, did your group come up with a different one?
Talked about this.
Oh, okay. So tell me a little bit more about that.
Donald Trump, his adult sons, and his businesses fraudulently inflated his net worth by billions of dollars annually to secure better loan terms and insurance.
But he says he's worth billions of dollars. All right, I'm not going to go down that rabbit hole. So yeah, there was a recognized fraud with respect to a representation of net worth of the organization, which was certainly inflated. That's certainly problematic. A couple others that I had identified that I thought were really interesting. One that's kind of interesting local to this area is the Kraft Heinz fraud. This is kind of a more recent example of the WorldCom fraud where they recognized they reduced expenses where they shouldn't have. It was specifically related to sales discounts. So they missed sales discounts for transactions with their organizations, but they still recognized them on the financials. And it was in billions of dollars of sales discounts. And then one that we're also going to talk about in auditing, but my personal favorite one has to do with FTX and Alameda Research. Okay. That was a fairly recent one. It's 2022, which is the commingling of company funds and customer assets. So yeah, a lot of different ways we can go to that. So I'm going to ask this question probably when I'm teaching this course, 3 to 5 years from now, and there's still going to be more recent examples that occurred because this always takes place. And my examples are not even that recent. I could probably find one for 2024, 2025 that were more recent. So some really, really good examples. But let's talk about something that's a little bit more subtle. Second area of financial statement fraud, understatement of net worth, net income is less apparent. What are some ways this type of fraud could occur? Back to you, Jack. What'd your group say on this one?
He said undervaluing asset accounts, delaying or underreporting revenues, accelerating or over-reporting expenses, or changing depreciation schedule.
Good. All good examples here. Now we're going to come up with the more challenging question here. Okay, so why might an understatement of organization's performance be construed as fraud? Isaac, what did your group say on this one?
We said it'd still be construed as fraud because the financial statements are still intentionally misstated, which would mislead the investor for anyone using the financial statement.
Right. So basically, this is still financial statement fraud. This is still misreporting of financial information. We tend to not think of this as bad because we say, why would an organization do this? So let's ask that question. Why would an organization do this? Why would an organization deliberately understate its income? Taxes is a good reason. I actually have that in my notes. Okay. I know it's hard to believe that I wrote the word tax, but I did. Okay. I actually wrote the word tax. So it can reduce tax burdens and prevent the inflation of stakeholder performance in future periods. Also can companies use reserves to manipulate income for future periods. So I'm using a kind of accounting term, but let's talk about what a reserve is, all right? So a common one is called the allowance for doubtful accounts. And basically what that means is if they've got a customer who goes bankrupt, they're not going to repay what's owed to the customer. And so they've got this reserve set aside saying, okay, we don't want to take a hit in our financials, so we're going to create this reserve account that we can draw from. What is the proper amount for this reserve account? What's always our answer? Depends, okay? There is no proper amount. It's basically on the judgment of whatever the management says. So if management says, I think we're going to up the reserve this year. We're going to put it at like 3%. We've been holding like 2%, but we're going to up it to 3%. What is that okay to do? As long as the auditor says that's okay to do, that's completely fine. And could they say, all right, next year, we're going to put it back down to 2. So they basically shifted some money from this period into a future period. That's one form of earnings management. And how frequently do we think earnings management takes place in corporate America? All the freaking time, okay? All the freaking time. That's only one form of it, by the way. The reserves manipulation. Interestingly enough, reserves manipulation doesn't occur nearly to the scale it used to because the financial segment, investors, they've become a lot more savvy about being able to identify that particular type of manipulation. So there's other types of manipulation, but it's still something that could be prevalent, especially in smaller organizations that are trying to keep their earnings smooth over time. How does that, by the way, if you're an investor, how does consistent returns, like basically periodic returns and periodic performance over time, how do you feel about that as an investor if you see that in an organization? You're like, that's great. They're consistent. They have a strong stream of income. In reality, do we think most organizations have consistent streams of income like that? Like 6% returns for history over the life of the organization? Probably not, okay? There's definitely some manipulation going on in organizations that are doing like that. And some of us are kind of like putting our fingers in our ears and like going, I don't want to hear about it. Don't tell me, okay? I just want to have the illusion that my returns are the same. So yeah, earnings management is certainly a problem. All right, so now we're moving on to corruption. So 4 general areas of corruption, and provide a brief definition of each. So let's go ahead and go to our 4 groups. So give me a definition of conflicts of interest, Hannah.
Where personal interest interfere or influence decision.
Okay, all right, good. All right, McKenna. Oh, I'm giving you an easy one, McKenna. Okay, what is bribery? Good, okay. Cole, what are legal gratuities?
Rewarding someone after an act is taking place without prior agreement, paying
Yeah.
somebody after they voted a certain way.
So it's basically a kind of a same thing as bribery, but kind of the timing is different. Instead of incentivizing performance, you're saying, thanks for doing that, here you go. And that kind of incentivizes future actions, the whole goal there. So it can be very closely related, but it's different in the timing. And then finally, economic extortion. Kate, what is that? Okay, what's another word for extortion? Blackmail. We don't like to use that word though. Extortion is so much a prettier word. Okay, we can get away with it. Think we're not doing anything wrong. Okay. So the question that I asked you in this particular situation is, which do you think, or which of these areas do you think represents the highest frequency of occurrence? I'm not going to ask any one of the groups here. I'm just going to kind of to consensus. What do you all think? What do you think is the highest frequency of occurrence? Bribery. I think bribery is kind of one of those things that's just ever omnipresent. Interesting question. So we have something in the United States called the Foreign Corrupt Practices Act that basically makes bribery illegal, not only just domestically, but with U.S. organizations operating abroad. So based on your knowledge, based on your understanding, is bribery illegal in other places of the world? It is not. Bribery is considered to be one of those things that you have to do in other organizations to get things done. It has to do with the fact that the many countries, their separation of government and organization, corporate organization, are so minimized that if you want to actually accomplish anything, you have to be able to bribe government officials to actually get process done. Doesn't that seem weird? Because we're kind of so opposed to bribery and say bribery is fraud. And like if you go to a different country, it's like bribery is a cost of doing business. So bribery occurs to some degree, whether it's recognized as fraud or not, it's going to be one of those things that occur quite frequently. All right, now getting down to asset misappropriation, one of those really, really critical ones. All right. Asset misappropriation generally falls into one of 2 areas, or generally there's schemes that fall into one of 2 areas: misappropriation of cash and misappropriation of inventory and other assets. According to the fraud tree chart on page 11, so let's go ahead and take a look at page 11. Look, we got theft of cash receipts, and I think I did the math. Theft of cash receipts had 30 different individual fraud schemes. Okay. So what makes cash such an attractive target for fraud? Jack, this is a pretty straightforward one. What did you think?
That dollar bills and checks are both easier to conceal while stealing than gold inventory.
Mm-hmm.
And that the liquidity of cash also makes it an attractive target for, because inventory requires sales for cash.
Yeah.
That's cash is already cash.
Yes. So is the ultimate goal to get cash whenever you're doing any type of misappropriation of asset? I mean, I suppose you could say, like, I'm not a rational human being. I'd be kind of like, I'm stealing cheeseburgers. I got a conversion mechanism for that. Yeah. But for the most part, we're going to kind of say that most people, when they steal assets, the ultimate goal is to get some sort of value out of it. Now, it doesn't necessarily be cash. Cash is a very general term. We could say crypto kind of falls in that same category, but ultimately it's something that has value unto itself. What is the term for cash and cash equivalents that I like to use with respect to its convertibility? So let's put it this way. What is the difference between owning a stock and owning cash? How do you validate that you own stock? Got some sort of ownership certificate, and you've got to have some sort of recording of that ownership. How do you know that you own cash? You have cash, okay? It's in your pocket. What is that called when you actually possess something? If the possession equals ownership. It's called a bearer instrument. A bearer instrument, okay? Is this restricted to cash, by the way? Is cash the only bearer instrument? I mean, crypto is kind of falls into that, but crypto has like different recording mechanisms that actually track the ownership. So, but cash is kind of the ultimate bearer instrument. We think of it, but is it restricted to cash? Can we say that this is the only bearer instrument? Has anybody heard of the movie Die Hard? I think we talked about this in advanced AIS. So there's old late 1980s movie with Bruce Willis back when he was the last action hero, and they were stealing bearer bonds. Okay, which basically the bonds were, if you own the bonds, if you had physical possession of them, you have ownership. All right. So they were stealing it, and they were going to move to another country with no extradition treaty, and Bruce Willis stopped them. So thank God for Bruce Willis. Okay. I think his name was Jack McClane or something like that. Why am I blanking on his name? I've seen that movie like a dozen times that I can't remember. Man, it sucks to get old. All right, so yeah, that's what makes cash such an attractive target is if you have the cash, you own it. By the way, we had a clue of this already. I already told you what I said the perfect fraud scheme was, according to Joseph Wells. By the way, has anybody watched the Crazy Eddie video already? Did anybody catch that Joseph Wells was in the Crazy Eddie video, the founder of the ACCT? He was in that video. All right. That's one of the reasons. I think there are actually better videos. It was a really low quality 2000s video with a lot of snarky comments and some inappropriate references. But I did want to put there Joseph Wells in there because he was actually a part of that. It was from a TV show called Masterminds, which used to be a serial TV in Canada, serial TV show in Canada. But what I say Joseph Wells, his best fraud scheme was steal cash, bury it in the ground, don't touch it until the statute of limitations has elapsed. Okay, because once you pull it out of the bag from the ground, it's yours. All right. Now, some may say that's really difficult, Dr. Barnes, because if I steal cash, I want it now, and that's the problem is that you can have a great fraud scheme, but if you're ever found to that fraud scheme, then you're going to be found guilty of it. They can tie it back to you. So find a way that you can't commit a fraud scheme to tie it back to you. I'm giving you ideas not to commit fraud, but for your fraud schemes you have to develop. Okay, all right, and also for fraud schemes in the future if you're going to go that route, which hopefully none of you do. Hopefully none of you do. All right. Within the cash section of the fraud tree, there are three branches: theft of cash on hand, theft of cash receipts, and fraudulent disbursements. Briefly describe each of these branches. All right, Isaac, what is theft of cash on hand?
Direct theft of physical cash of the business possesses on hand.
Yeah, so basically just what it sounds like, okay? Easy definition. All right. Theft of cash receipts. Hannah, what is that?
Organization after it has been reported on the books.
Yeah. So through a sale or some sort of like transaction that receives cash associated with it. And then fraudulent disbursements, what is that, McKenna? Good. Okay. So there's multiple ways it can be dispersed, which is so it's important to note that there's a lot of different directions that we go. It's a very general term. Which one's least likely to leave an audit trail? So Cole.
Least likely.
Least likely.
Skimming. It's probably gonna be the least likely to leave a trail, just because there's no really record of it, if it's
Right.
like skimmed off the top.
Yeah, in general, anything that has the theft of cash on hand is going to be the least likely, but I think skimming is probably the easiest one because that's just basically taking it like that. Like we hear about that kind of as a nightmare for bar owners. They say that they've got people skimming off the top of the bars all the time. They just basically don't record the drinks being sold, and they just take a $20 bill and put it in their pocket. By the way, if you ever see that when you're out for AYCD some night, I'm not going to tell you what to do. I'm just going to say, be cognizant of your surroundings. Okay, be cognizant of your surroundings. Which one's most likely to leave an audit trail? Kate.
Records kept on both sides, therefore it'd be easiest to confirm that these transactions are fraud.
That's good. Yeah, good observation. Because not only do we have a record of it in the the existing system, but usually we're dealing with some sort of outside party that will also have a record of it, which is going to be a kind of a dual reference. So yeah, most likely leave an audit trail in that situation. All right, last question. Consider the misappropriation of non-cash assets such as inventory. If cash is such an attractive target for theft, why do fraud steal other assets? So Jack, we're back to you, and you kind of alluded to this a little bit already, but we're going to go to the flip side.
These say the exact same things that I mentioned before. It's, the use of disguise. We reference the printer ink case.
Yeah.
Of that. There's certain inventory that's easier to disguise than others. And then it's less liquid than cash, which makes it a less obvious target of fraud when it comes to determining if a fraud actually occurred or not. And there's more options on how to gain eventually from inventory after storing it. You could either sell it or use it rather than just using the cash.
Right. So what is the characteristic of an asset that needs to exist in order for it to be an attractive target for fraud? Like I used inventory as an example. Why don't I use this building as an example? That's also an asset. Why do people steal the building? You can't take it with you. It's very, very challenging. Okay. So the conversion mechanism is very challenging. It's like, okay, I got a building in the back of my truck. Do you want that? It's like, are you crazy? I'm never going to convert that. Even the materials are probably not worthwhile because they've been in place for so long. So yeah, conversion mechanism is really, really challenging. Inventory is very easy. You go to eBay and sell it, or some sort of mechanism like black market mechanism. You can sell it. It has to be a convertible item. Now, this is an interesting point because we've seen fraud schemes that actually deal with both cash and other versions of assets. But if cash is the ultimate, most liquid item, it's a bearer instrument, why would we even bother with that? And so I kind of alluded to that. Do you think organizations may take security of non-cash assets less seriously than they do for cash? So this is a yes/no question. So what do you think, Isaac? What'd your group say?
We said yes, because cash would definitely have a stronger control, simply because organizations want to protect cash at all costs. Other inventory may need less oversight.
Yeah. And do you think this scales with the degree of convertibility of a particular item? Like if we're talking about inventory, do you think that's taken more seriously than something like the tables in this room? The tables in the other room I didn't talk about because those are broken. All right. But the tables in this room, yeah, probably is like the security for the tables in this room. There is security, but it's not going to be nearly as detailed as security of other items that are easy to kind of pick up and walk off with. So again, it really has to do with kind of the ease of conversion and what is going to be something that can be easily converted to cash. So some things to think about, but again, kind of a brief introduction to the different types of fraud schemes. And we'll get a little bit more into both of those when we talk about Crazy Eddie on Thursday. So have a wonderful day.